I guess they're trying to get someone to call an advisor. I mean,
Yeah,
so it's
yeah,
like,
that is true.
here's a picture. It gives you no facts. Call the advisor.
The further you get down this post, the more you're like, I got to talk to somebody to even know what the heck they're trying to tell me.
This podcast contains the arguably witty banter of two friends, Skippy and Doogles, that like to debate about investing. The content is intended to be entertaining and for informational purposes only, not investment advice. You should do your own research and consult a financial professional before using any of the information in this podcast, and especially before investing.
Well, I mean, first and foremost, I feel like Kanye today. And not even just feel like, I'm just going to call myself Kanye.
It's now Ye. He changed his name, don't you know?
No, but I'm talking about Kanye. I'm talking about like 15, 16 years ago, Kanye spitting it through the wire, man. Getting surgery don't stop me. You know what I mean? Getting major
your mouth is not wired shut.
I'm talking about not wired shut. You don't understand what I'm going through. You don't understand my struggles right now.
That's a good album, dude. Did you also drop out of college?
Spitting it through the wire, man.
This is a lot of drama. Like, I don't really believe this. We've all had major surgeries, and none of us are gonna take as much pleasure out of it as you.
So they finish up. I turned 17 this week and got my wisdom teeth taken out.
I thought the
context.
HIPAA laws wouldn't allow us to share that with the listeners. Look at you.
But HIPAA, you can share your own ish. So we wrap up the surgery, right? I got all this gauze in my mouth, so can't really talk that much. They put me into the wheelchair, and my wife's out there waiting. Before we go through the doors leading out to the front, I turn and this is dribble drabble coming out my mouth, but I turned to the woman that's helping me along, and I was like, "We got to make this dramatic." And she goes, "Well, actually, I think I said," and she goes, "What?" And so then I got all my sensibilities about me and said, "We got to make this dramatic." Opens that door, and I just slump over the side of the chair with my lip curled down.
Yeah.
Just so I could freak her out. She knows I'm melodramatic though, so it didn't work quite as well as I wanted it to. But you gotta take advantage of these opportunities. You going good this fine week?
Well, hold on. Don't worry about me for a second. How you feeling?
All right. Really tired. I didn't consume anything really yesterday. And so I'm tired there, and I got some pain going on. But other than that, I mean, this pod always gets me fired up,
I'm excited for this. There's a fair amount of interesting stuff still going on these days, and crypto seems to continue to rule the world in terms of the conversation about all the Bitcoin ETFs and everything, and Bitcoin all-time high. It's just not leaving the human psyche when it comes to financial talk. It's everywhere.
Just the way the conversation goes will change, but it's going to be there for a bit. You got a place you want to start?
Yeah, let's start with the quiz. This should be fun. I know you're a t-shirt guy, right?
Free t-shirt guy, yeah.
Free t-shirt guy. So this week, a t-shirt sold for the highest price ever. I'll give you a few hints. The t-shirt's from 1967, and it was auctioned through Sotheby's. Sotheby's, rather. How do you say that?
Something like that.
Any guesses for how much this thing sold for?
Oh, the price is what I'm going for. T-shirt, 1.8 million.
Wow. I mean, we've done a lot of quizzes on the show. That's the furthest you've been off by a significant margin. I guess you just don't have any sense for the t-shirt market since you always get free t-shirts.
I get free t-shirts. I figure, because my assumption is that all t-shirts are at least $1 million. So I'm not trying to pay that kind
of... $17,640. It's a Grateful Dead t-shirt, originally designed by a Hell's Angels graphic artist.
Oh, okay.
And that it was in the possession of one of their former drummers or something. I thought that was a ton of money. Maybe it's not in the grand scheme of things.
It is, but it's not. 17,000 is. I'm not about to pay $17,000 for a t-shirt, so let's just put that out there. But it's not something that I would assume you have to be 1967 Grateful Dead to also get to, right? I mean, we got there. Kanye, speaking of my essence that I've got going on right now, his shoes are like 6 figures, right? He's like come out with shoes that cost that much. And so I know t-shirt shoes, they're different, but that's just like a drop. You know what I mean? So I kind of thought if it was an NFT, it would have been millions.
No, actually, that's the best point. That's exactly what I was going to say. Like, this would be $3 million if it's an NFT. It'd be like 400 Ether or something.
There it is. Oh, my goodness.
All right, what's up on your end?
Before we get into the world at large, can I discuss something that's come up? So there are questions that have come up around this previously from listener mail. And so wanted to highlight a internet drop that peeps are going to be able to, once this airs, people are going to be able to see on the spider tubes. And that is talking about specifically the holdings that one Doogles has. The questions that have come up have been like, what do we have? What's our track record? Right? People have asked that type of stuff before. So putting out on the skippyanddoogles.substack.com, you'll be able to see a couple different things that are going to drop. One is the thought process behind my model, which I've called Farfin, because why the heck not? And then the also just an update on this quarter's portfolio results. So go out there, check it out. You can see entire portfolio. None of this is ever investment advice. In fact, on there, it will like say very much so that I'll talk specifically to my method of investing. It's pretty aggressive, fairly concentrated. That doesn't fit the needs of most folks they have. That doesn't fit the psychology of most folks, but I want to put that out there so listeners can get a tangible take.
This is really good though. I'd really encourage anyone that's interested to check it out, because not only do you do like the walkthrough of kind of how your investor methodology evolved, like why you ended up where you ended up, the pros and cons of that, some modeling around that. I thought it was really good. Doogles can write. Get ready, guys. Enjoy that. Yeah, I mean, your current portfolio holdings, what's your top holding? 30-ish, 40-ish percent?
Dexcom, yeah. It's 39.7% as of the end of last quarter. 39.7% of the portfolio.
I mean, that's something there, Doogles.
It is. It's something. It is something. So, yeah, check it out. And my top 10 are like a little over 80%. So, but I mentioned this in there, last year between March and like the endish of the year, a little bit bleeding into 2021, bought a whole bunch. I'm usually not that active. And so, but between that period went and bought a lot. And so my total portfolio is somewhere around 50 holdings right now, which is more than twice like what it's ever kind of maxed out at, I think. But what's interesting there is that there's still so much concentration up top. So a lot of that is like a bunch of micro bets that kind of add up to that last 20%, but top 10 holdings are about 80, little over 80%.
Yeah, no, I definitely, that long tail, like off to the right side of your portfolio, those 40-ish bets that only make up 20% of the portfolio is really interesting to me. That typically doesn't happen the way I invest and rebalance. Was the thought there that those are just like asymmetric upside bets, or is it things where some of those started as a larger bet and have fallen off? How did you end up with like that long tail?
Yeah, it's a mix of a few different things. For the most part is you probably remember we were talking about this early 2020, like before the pandemic, kind of hit the markets, how I had a good amount sitting in cash. Mm-hmm. Like there was a good amount of portfolio sitting in cash. And so there are a number of these that I just saw as, I'd say semi-asymmetric, like not huge, like because of the bets that I'm making, I saw some that could double, triple, right? Like that kind of returns.
Yeah.
But they're still a small part of my portfolio. So it wasn't like asymmetric for my portfolio type of bets, but I was sitting in a good amount of cash because I wasn't sure where the market was going to go. Like I was trying to fill that out for myself. And so a number of these are an alternative to cash, which seems weird because you go from like safety to equities, like aggressively, but that's where a number of them came from. I was like, this seems like a pretty safe place right now because there were stocks that had dropped off by 70, 80% and had outperformed the S&P or the market overall by like 3x over the previous 5 years. So I was just kind of like, I was sitting there, I think, for the most part. And so as I mentioned in there, my plan is actually to divulge. That is not the right word. Divest. There we go. I'm not revealing. I'm getting rid of the vast majority of them in the next like 4 or 5 months. So as I hit the year, then I have price targets that I set for them. And so they'll sell off. So they're not long-term holdings for the most part by any means, but that's where we're sitting. So yeah, give it a read. It's interesting as to what people have asked about. So I hope that this is interesting for people to look through, but give it a whirl.
Yeah, I thought it was really well done. And it's awesome of you to be willing to share that. So send feedback our way. We have talked about maybe early in the year doing a deep dive onto both of our portfolios. There seems to be some listener interest for that. Again, though, we straddle this line of not giving investment advice, but wanting to be transparent about the methodologies that work for us. So we're learning the best path forward here, and we'll take all the feedback we can get.
Thank you. Again, Skippy and Doogles, all spelled out, .substack.com. All right, fishbowl.
Yeah, let's go.
Should we let's wrap up one loose end somewhat quickly, and then we can kind of go into some other things. So This week, it came out that Jerome Powell, chairman of the Fed in the United States of America, also has been doing some trading recently. And so that came out, not in individual stocks, but there were a couple big purchases that were in market funds. So that came out, and the Fed is now saying, okay, for realies, we're going to get stricter on our guidelines. Yeah. We talked about that previously, how there were a couple, I think it was Dallas and Minneapolis, I believe, if I remember correctly. Yep. They come out, a few other things that come out. And so just to kind of wrap up that little, maybe not wrap up fully, but go back to that thread.
It's a bad look, but I'll tell you, at least it's not individual stocks. That gets me less fired up. It's still a bad look when we manipulate the markets with the Fed more than we ever have. I mean, especially in the last 30 years. And it just feels like, and Douglas, to your point earlier, all these people seem to be multimillionaires.
Yeah,
it just seems like, oh, hey, I really need an extra $2 million. I don't care if I have insider information or if I'm actually manipulating the funds that I'm buying, because I'm in the world's most unique position to do something like this.
Yeah, I didn't realize that Powell had been in investment banking for so long. That was his career. I didn't realize it. I've never really looked back too much in his career. Yeah,
thanks for putting a ball on that. Let me grab one thing from the fishbowl, actually. The guys at Euclidean, which is a value investing shop that uses machine learning to pick their holdings, had a really nice article this week called "Value Investing is a Hedge Against Inflation." Really simple. The main chart here sits with a scatter plot of returns on the y-axis versus inflation on the x-axis, and has a nice little linear regression that shows as inflation goes up, historically, the returns of value picks have gone up. So it's a good read. It's on the Euclidean website if you guys want to check it out, but definitely worth mentioning.
I haven't read this, so this has nothing to do with the Euclidean piece, what I'm about to say, but I got a question for you.
Yeah.
Maybe it's a statement with enough of a British inflection at the end to sound like a question.
Oh, James McIntosh?
No. Come on now. We've actually had multiple people.
Yeah, William Green? Come on.
Yeah, exactly. So it seems like to me, if you created a Mad Lib, I just said value investing is a hedge for, and then at the end, I feel like you just replace whatever's going on. I just feel like people just replace that last word, and then there's some chart that shows.
Oh, no, that's not people. That's me. Value investing is the solve for all your problems, Douglas.
I thought you represent the people.
No, it's the prescription. Whatever. It's like the Tylenol of your investing woes. Just take some Tylenol, rub some dirt on it. Let's go.
I feel like it was I don't know, 2 years ago, Taylor Swift drops a new album, and you're like, did you know that value investing tends to outperform after a new Taylor Swift album?
That's actually really true. Although the R squared on that is weak. But yeah, so actually, let's bring it up since you like to throw shade. And investing in equities is a pretty good hedge against inflation. So I'm not sure that this particular take is doing anything revolutionary. If prices are climbing rapidly, holding cash gets to be a very bad decision because your purchasing power erodes quickly. And if your cash is invested in something that has pricing power, then they can increase their revenues, which ultimately increases their profit, which causes the typical profitable equity to grow at a rate that at least matches inflation in most cases. So yeah, that's what we're saying. Keep throwing shade, keep sending Mad Lib examples my way, but I'm gonna roll with value.
Okay, let's go fishbowl quiz for a second to go into another topic. You ready for this?
Yeah.
What this week, I'm rounding up a little bit, but 10x'd its performance with a whole bunch of nonsense.
Oh, the world's, wait, I gotta make sure I say this correctly. Truth Social, but also Truth TV, and also Truth Web Services. What else am I missing, Doogles?
You're missing nearly everything. So this is the no. I'm just you hit a lot of it. I'm just saying there's so much more. Like there's a long tail of it. Is what I meant by that. So there's this self-proclaimed mission-driven organization that is being acquired by SPAC this week. The SPAC is what 10x'd, nearly 10x'd in price, and it's Digital World Acquisition Corporation, DWAC.
Yes,
DWAC the SPAC is what it's commonly known as on the Wall Streets.
Yeah, that's what it gets traded at on the street. It's like drug dealing.
Yeah, exactly. So it looks like there's an agreement for this SPAC to purchase Trump's social media empire, I'll say. Empires usually are built on something. This one is a self-proclaimed empire that is built on a deck so far, it's enjoyable. And who knows where these things turn out. And so I'm not trying to say this is going to do well or not going to do well. But what I am trying to say is it's amusing in the process. That's what I'm going to say. So I want to drop a couple things from this pitch deck.
Yeah.
So one, they have a slide that is titled Corporate Competitive Structure. So at the top of this, let me just make sure I get all my details right. Okay. So at the top of this is like the empire, the emblem of the empire. And then it goes into a few different little, I don't know, operating companies. One is Truth Social. Truth Social, I'm going to say it right here, right now. You heard it here. Third is going to be the future Facebook and Twitter.
Yeah.
Okay. All right. Boom. Done. Conquered. So just like two of the largest social media companies, we're just going to take those down. Hundreds of millions of users. We got it. We got this.
Yeah.
Next, you've got the incredibly uniquely named TMTG Plus. Because if you add the plus,
then it's a media company.
Then it's a media company. So now we're not good with hundreds of millions. What are we going to do? Add on some more. Hundreds of millions.
Take down Netflix, baby. Yeah.
Not just Netflix. Why would you stop at Netflix?
Okay, good point.
Disney Plus, like a legitimate media empire. So we're going to take down Disney Plus and Netflix. All right. So then you're like, I mean, I'm sitting there. If I was sitting there in the strategy meeting, I go, man, I thought we were ambitious when we were talking about Facebook and Twitter. I thought we were ambitious. But now I know we're out of our skis. We're talking about Netflix and Disney Plus. But you know what? Let's hunker down. Let's do this. No. I've only talked about the left hand of this slide.
Yeah, okay? Yeah. We're halfway through, right? Yeah.
Are we even? Halfway through. So now, where are we going to be without news? So now we're going to take down iHeartMedia and CNN. Okay. This, at least you can say what you will about this part. It's ambitious. You got to be in these pitch decks. You got to go after it. And news makes sense given that. So we got Twitter, we got Facebook, we got Netflix, we got Disney Plus, we got CNN, we got iHeartRadio. I'm not exactly sure what the corporate competencies are here, but we can do this. We can do this. But why stop when there's still more internet to take over?
No, because you don't want someone to be able to take down your video streaming platform or your social network platform. You got to own the bones, the foundation to that, right?
And I am 116.7% sure that that's the way the conversation went, is that someone's like, even if we did this, we got to push back against the core infrastructure of what didn't allow us to do this before, right? And so why don't we just rebuild AWS? Why don't we just rebuild Google Cloud? Why don't we just rebuild Azure, right? The
All
Microsoft
of them.
one.
Let's
just do that. Let's just do that. And then somebody said, not enough, because we got to be able to collect payments.
Wait, there's more than that?
Yes.
There's literally more than that.
We got to be able to collect payments. So someone went, okay, well, how are we going to collect payments? Why don't we just rebuild Stripe?
Oh my goodness.
So
this is the whole internet.
Yeah. If you take Facebook, I'm going to talk from like a market cap perspective. I don't have the exact numbers, but you'll know this is close enough. You take Facebook, you take Netflix, you take Amazon and Google. Like if you take those orgs, and these aren't the holes of those.
And Microsoft.
Oh yeah, I forgot. Just that little player.
And let's on Twitter. I mean,
that's something like 25% of the S&P 500 market cap. And then Stripe is not yet public, but valued at roughly $100 billion as a private entity. This is, and I'm sure I don't even know if there's like I can't remember if there's like a people section to this deck, but I bet there's like no technologists.
Well,
you know what I mean?
there's one dude, I think. There's the CEO.
Ned in the corner.
Okay, can I just my fact checks are going to be loose because I was not interested in this week, but
no,
I think the CEO.
Before you do, I forgot the creme de la creme. Sorry, before you do, there's always that question of like what makes you able to do this?
Yeah,
2 proof points to show like the history of success and being able to accomplish things like this: The Apprentice and Miss Universe. That is what was thrown out.
All right.
Okay,
so I try to never talk politics, or very rarely, because I don't want to get anyone in trouble. It's kind of hilarious. But what it reminds me of, I do mentoring at the local college, right? And sometimes you get these presentations that are like outlandish in terms of their expectations or not understanding how complex some of these challenges are. Like, at the college level, it might be like, oh, we're going to do Airbnb for X, and you go, do you understand how challenging that is? I've never seen someone be like, we're gonna rebuild the entire internet. But what's fascinating about this, let me try and bring like some intellectual conversation. So Sam Bankman-Fried is the founder of FTX, which is a cryptocurrency exchange, and he was on with Patrick O'Shaughnessy this week. He made this brilliant point that solves like half of the issues for this Trump organization. He says, and Jack Dorsey has said this in the past as well, that the future of social networks is a decentralized blockchain. Now, Doogles, I just want your initial reaction. I bet you think that's a stupid idea.
I don't think it's a stupid idea. And when those folks say something, there's a there to what they're saying, whether or not it ends up being the end game. I don't think it's a stupid idea. I think that
so listen. So it takes away that having to rebuild Google Cloud or Amazon Web Services piece. So his point is, if you have a public decentralized blockchain that is a social network, what that means is because it's public, Twitter could tie into that feed and pull down activity. Facebook could go to the same feed and pull down activity. Basically, you could create this central foundation that each of the platforms could tie into. And then when Twitter says, I want to ban this content, the person who thinks Twitter is overreaching goes back to the public blockchain and says, okay, I don't trust Twitter's content management anymore. I go straight to the source. It's a very interesting idea, isn't it?
I think a lot of ideas are interesting. In the theoretical of this is very hard to bring into reality. When we were discussing a version of Chris Dixon coming out from A16Z, coming out and talking about some of this too, and I think where he was going with it was the idea that you can finance the building of your platform via blockchain.
You could with tokens, yeah.
That I start to kind of catch on to a bit. I think that there's like something there. But when you ask the question of what is at the core today of the success of something like an AWS and a Google, there's so much more, and a Google like Google Cloud, there's so much more than what's being thrown out there. And the attempts that I've seen of creating something that's decentralized for something this large haven't come to fruition. That doesn't mean that they won't. It's just that I think that there's always a strong use case, which we've also discussed before, that you have to have in order to get it over the very, very, very big hump, right? That ends up coming from decentralization. And the attempts I'm talking about are things like a decentralized internet, like for people to use. For example, it's like we're going to tap into everyone's computers in the US in order to use, the relative bandwidth. That kind of thing is just you can't. It's not reliable enough. Because of decentralization. So there's a lot to figure out there, but I don't want to dismiss the whole thing. Like there's a lot of intelligence behind it.
Yeah, but so you said the SPAC went up 10 times this week. I wish I had the market cap in front of me.
Extrapolate that.
I don't know what the goal is here because as you mentioned, the deck is so wide ranging that it's like the scope is so large there's actually no scope. But I'll tell you, if the idea here is to build a social network that cannot be censored, I think blockchain is the right technology for that. And I think they could do a coin offering where the true Trump supporters would send them millions of dollars almost overnight, which would give them a technology budget to build on, which then you'd have the foundation of a social network that cannot be censored, that is truly public and truly decentralized. And I think if that is the true goal, you could accomplish that more quickly, more efficiently, and actually reward your backers in a much better way.
Yeah, the altruism behind that, I think, is partially what makes it like difficult. I agree with you. By the way, this is I agree with you for like that. It would be faster that way. The market cap of this is now $3.4 billion. The SPAC. Trump let's get away from anything political. This is just like, I'm talking about his superpower. Like Trump's superpower is the ability to galvanize individuals and organizations even in a way that gives him money. That is his superpower. Like,
True.
Which is very different than having a superpower that allows you to accomplish something, right? The execution of something like this, you're right, the fastest way to do it, the most effective way to do it would be on something like blockchain. But when you say the proof is in the pudding and the pudding is Miss Universe.
Yeah. You got me like fired up this morning and I kind of forgot things. I was building a business case to actually build a product. He has no desire to actually build a product, huh? It's just about raising money.
Yeah, just about raising money.
Wow. That's a little depressing. Okay, so let me ask you one last thing on this topic.
Yeah.
Is because I went back and forth this week, actually. Is this a good investment or not?
It was on Monday.
What I mean there is, if you know that there's going to be some money behind this that has blind faith to potentially continue to put money in, can you read the supply demand narrative? And I think it's too late for this, but
it may not be too late. But here's the thing with the people that have the superpower that Trump has. Generally, they're great investments so long as you have inside information to understand when to get out, because there will be an exit point. This could go up another 10x, and like I don't think I'd be all that surprised because of the power that's held there. But it's like it's going to be 10x in one direction and 100% in the opposite direction. Like, is maybe not 100%, but that's the trajectory. And so long as you're the one that can send the Slack message, right, as the president of Robinhood did, to say like, oh, FYI, tomorrow this is what's happening, then you're golden. And so for multimillionaires, and billionaires that are getting involved here, I think they're going to do great.
Yeah, and actually, I want to revise my question because this is not an investment in any way, shape, or form. I mean, I really meant, is this a interesting speculation? Because I agree with you that long term, I think the chances of this SPAC being worth anything are basically zero, because there's no company there, and you need a company to generate cash.
What did Warren Buffett say about when people get greedy?
You can't do that on the pod. Don't disrespect Warren Buffett like that. I don't know. What did he say?
When people get greedy, you get fearful.
Like,
when people get greedy,
we're in prime greed right now.
Speaking of greed and silliness, for a sec, can I go back to like just little personal playtime that Doogles had this week in the markets?
Okay, yeah, but I think I'm sending the world's most massive disclaimer that Doogles' behavior here is borderline idiotic. I'm not trying to use like big words, but do not do this. This is a horrible idea, in my opinion.
Yeah. So I decided to do some long-term investing and invest in value stocks.
Well, goodbye, Doogles. Well, goodbye. You got some UVV?
So, no, I'm joking about that. So there's a conversation that Skippy and I have been having for a bit. We haven't had it directly on the pod yet, but maybe later this year we will. I have this market top proxy that I built, and I have a feeling and Skippy's going to go. He's going to dig into this too. But I have a feeling it's going to go off, or it has a strong potential to go off the beginning of next year. So something I've been thinking a lot about is, how do I want to play this? Do I want to play this? I've been looking at things like inverse funds, et cetera. And one of the things I'm considering doing is buying put options against the market if this goes off next year. So anyway, so that's some background context. He's covering his face out of excitement about this. So that's one of the thought processes that I have. But so I've been in the, I'd say, the private options world for a while. I've been in 6 startups. I've got my Carta portfolio where I've got exercised options or some unexercised options for a whole bunch of startups. So like options in that world, I've touched before, but I've never bought options for the reasons that Skippy stated earlier, the high level thematic reason of like silliness. I haven't bought options on the public markets. And I just kind of said, if I'm going to be in a world in a few months, potentially, where I'm going to be buying a solid amount of my portfolio in options, let me just make sure I get how the mechanics work. I studied finance in college. I've done like Black-Scholes stuff. I've done all the academic side of options, but I've never bought them in the public market. So yeah. I did a couple like tiny purchases. And when I say tiny, I mean, in total, these buys were 0.05% of my portfolio. So it was just like dabbling literally to make sure I get the mechanics and make sure like the models that I put out there work. And I tell you, it took me, so I think I picked them up on Monday or Tuesday. I bought a few contracts for one company for a call, and then a few for the puts. And so that means for one, I was betting it's going to go up. For the put, buying the option to sell, right? Betting that the stock's going to go down. So that's what I bought. Within 24 to 48 hours, I just went, nearly no one should be allowed to buy options. Like, was my takeaway. This is, I can see the potential of this one being so addictive.
Yes.
And if it's so easy, and the swings are massive.
Yes.
So there was on one of the options, it was down. So it was up on like Wednesday, it was up like 40%. On Thursday, down like 65%. Yesterday, doubled. And I'm just like, this is a whole world that that's just gambling. Like
it's just gambling.
And people that are professional investors that do options for living have all their models. I'm not talking about you. I don't know, right? Because it's not my world. I'm not talking about you, but I'm saying the everyday retail investor having access to these.
No, yeah,
oh my goodness.
Don't give the so-called professionals a pass. I'm sure there's more than one. There might be 10. There's one person I'm aware of that has done this well, and it's Edward Thorpe. Am I missing anybody else?
Who invented Black-Scholes formula before?
Yeah, like who is so much smarter than, it's like me and Doogles, 1,000 of our best friends times 1,000,000. That's Edward Thorpe's intelligence. All right, this is a terrible. Okay, maybe it's not a terrible idea. This is gambling. It's not investing. Like just flat out. So if you want to go to the casino, go to the casino or go to Vegas. Doogles' favorite. Doogles, actually, since you love Vegas so much and you think options are crazy, like I'm a little surprised. That tells me all I need to know.
It does. But that's part of the purpose is, look, so I step onto an aeroplane. I get off of that same plane in Las Vegas. I have like my gambling money that I want to play around with. And then I get back onto the airplane. I get back home.
You disconnect.
That's the world.
Yeah.
I disconnect.
You can compartmentalize. That's a big deal. In terms of the gambling mindset, right?
I knew that these were gambles, right? One of my contracts is up next Friday and the other one is up sometime in November, right? And so like, what's going to happen with this stock in a week? Who the heck knows, right? And I'm just like, let's just kind of play around with it. So I know that. But those swings, oh my goodness. And that's the other reason is I want, this is my investing life is compartmentalized and is different. And even the options I'm potentially talking about that you shake your head about, in potentially early next year, it's very calculated, and I've been talking about and debating it for months still. Right? I mean, that's a different world. Whether it's a good idea or not, time will tell. We'll see. But I got to separate those two worlds. When I sit at a poker table, I sit at a poker table. When I'm looking at stocks and whatnot, that is not my poker table. So Anyway, caution to the world. If you think about options, I would say think again, or at least know what the heck you're getting into, because these swings, it was. But let me be honest, it was a little fun. It was a little fun, but that's not how I play around in the investing world. So,
oh man, yeah, that makes me a little sad, but I understand you had to scratch the itch. For the record, I am 100% against this idea. I want to talk about we'll turn this into a quiz. I want to talk about the gap in expected services between services received for financial advisors. So when people start a relationship with a financial advisor, what are like the core things you think they're looking for, Doogles?
they want someone to be able to take their personal situation and map that to what the potential options are, where they can put their money so that they can have a nice return over the long run. Generally, I think that's what they go in with. Their definition of long run may be different, but I think that's what they go in with.
Yeah. How about like broad categories in terms of like investment management,
Oh, like that.
planning, like what is
Yeah,
just
like I'd say tax support, investment management, including like fixed incomes, equities, that kind of stuff. Probably more day to day, like budgeting. How should I where should I put my money for this year? That's not necessarily investing. Those kinds of things.
nice. So, what they really want, I'll give you top 3 or 4: financial planning, wealth transfer advice, investment management, trust services. Taxes is up there as well. And then it goes into less people want like life insurance advice and real estate advice and those sort of things. Here's what they get. They get investment management and a little financial planning, almost no wealth transfer advice, almost no estate planning advice, and almost no tax planning advice.
Is that a switch of like once they actually create the relationship, what they ask for? Or is that a bait and switch on the side of the financial advisor?
I don't think there's ill intent here. I think it's that both sides aren't necessarily having that conversation. There's not like a service agreement in place that says for X amount a year, and there's a reason for that because the pricing is sometimes hidden from the customer in a way. If you're taking 100% of their assets, that's not always crystal clear to them. But that's where I took this. Is it could just be you could be more transparent about the scope of the services that the financial advisor is offering, and then on the client side, more transparent about your expectations for what you hope to receive for that, because there's definitely a gap here. Basically, the only thing that people seem to agree upon is the financial planning advice and the investment management. The rest, most advisors appear to be doing a very poor job of providing.
How is the expectation question phrased? Does it show that?
I'm looking at a summary here. This came from advisorpedia.com, and I don't have that answer immediately in front of me.
I'm wondering if it's a backward looking of what did you expect when you were right, and people are also thinking, what have I needed since then, and check all that apply.
True.
Or is it like while you're signing up for a service, what do you expect to get from this service? Like looking forward. Curious about that.
Yeah, it's not crystal clear. The article I'm reading does not break down the actual questions. It's the gap between services expected, so I'd assume that's before starting the relationship, and then services actually received.
I think that gap on my side goes in the opposite direction. Like there are expectations for what financial advisors want to give me, and all I ask for is tax advice. that's the only thing. There's like pitching of all this other stuff, like let's walk through. And I was like, no, I'm good with that. But can you let me know about the tax advice? So that's all I go for.
I mean, so why aren't you leaning on a CPA or someone else? I think a financial advisor is probably the wrong place to go if you only need tax advice.
No, that's pretty much, it's like, because they have their suite of services. And so I just work with a CPA, but then it's like, well, what about these things? You know, we can also, it's like, I know all of this. Did you know I could also? Right, is what I say.
Oh,
I got one last fishbowl item for you.
Okay.
This is something you sent over to me, and I think that the questions in are interesting. Since we're talking I'd say broad strokes investment stuff today. So what you sent to me were key questions for long-term investors. It's on dimensional.com, financial advising firm that's been around for about 40 years. So I'm going to hit the questions themselves because I think the questions are interesting. And in fact, I think the questions are more interesting than some of the answers in here, but I think that the questions are interesting. So here are the questions. 1, what sort of competition do I face as an investor? That gets into like how easy or hard is it for the individual investor to be able to do their thing? 2, what are my chances of picking an investment fund that survives and outperforms? This one, I thought the answer had a little bit of interest in it, but we'll come back. 3, if I choose a fund because of strong past performance, does that mean it will do well in the future? We all know the answer to that one. 4, do I have to outsmart the market to be a successful investor? This one actually kind of talks against themselves, I thought, but we'll get back to that one too. 5, is there a better way to build a portfolio? 6, is international investing for me? 7, will making frequent changes to my portfolio help me achieve investment success? Their answer here had nothing to do with the question, by the way, I thought, which was kind of fascinating. 8, can my emotions affect my investment decisions? 9, should I make changes to my portfolio based on what I'm hearing in the news? And 10, so what should I be doing? That's the sales pitch.
And then it says, call an advisor.
Yeah, exactly.
There is some good, not all of this is like amazing, but there is some good stuff here. And most of those, I would hope the listeners had an easy yes, no answer to, because most of those questions are pretty obvious.
You think? But it's where some of the root of this kind of comes down to, we've talked about this so much in the pod, is when it gets down to the question of, can my emotions affect my investment decisions? Yeah. And what I think is interesting, like the lens that I kind of took on this, is if you put yourself in that emotional place and then you ask the other questions to yourself, the yes or no becomes less obvious. And that's hard to do, right? You can't necessarily put yourself in that position, but it's kind of like when everything's up and to the right or everything's placid, you're in peace times, right? I think there are more obvious yes or no's to hear. When you're in war times, right? I mentioned that the quarterly post earlier, right? Quarterly portfolio post earlier that I mentioned, and showed TAL, which we talked about in here, is down 93%. I still hold that thing, right? That's war times. When you're sitting in your TAL type situation, then ask yourself the question of what sort of competition do I face? Like, how good am I at picking individual stocks? How will my emotions impact? Do I have to outsmart? Like, start to ask yourself those questions then. That's one psychological piece I found interesting.
I love it because, I'm going back to the William Green interview where if you're hungry or tired or stressed, you make poor decisions, right? And so to me, these questions are, almost all of them are a really easy yes, no, but I'm in a relaxed, long-term investing mindset, right? So like, do I have to outsmart the market to be successful as an investor? No. I like to think I'd say no in all times. If I choose a fund based on strong past performance, does that mean it will do well in the future? More likely than not, the answer to that is no. Almost never does the outperformance continue.
And they had a couple stats on that.
Yeah.
21% of top ranked funds remain in the top quartile, so the top 25%, 5 years later. So you have about an 80% chance of that being no for equity funds.
Exactly, which is massive. Also, what are my chances of picking an investment from the fund that survives and outperforms? So in the beginning of 2001, let's call it 20 years ago, there were basically 3,000 equity funds to start that time frame. Only 41% of those have survived, and only 19% of those have outperformed. It's massive.
Yeah,
it's
overwhelming.
Just doesn't have it. Yeah, it's like that's not.
I don't know if we've put this out on the Twitter, but we should. It's an interesting, pretty short read, fly through it. Again, I think the questions to me were more impressive than some of the answers, but it almost felt like they started to get, to quote William Green, hungry, tired, etc. during the article, because the first 3 questions, the answers were more interesting, and then it was kind of I don't know if they switched analysts or what, but started getting a little less so. But it's worth a read.
So I think you skipped question 6. It says, "Is international investing for me?" Like, how could it not be for you? You want to hold like the 3rd most expensive stock market in the world exclusively because what? America? Like,
and yes, absolutely what you're saying. And this is part of where I said like the answers really started to get a little before this less interesting, because they didn't even say that. Like, that is like a reasonable thing to throw out. What it says is the S&P 500 index in the US has about 505 stocks. If you go across the world, there's almost 9,000 stocks. And like
exactly.
What's
like, there's the graph I always put out from the JP Morgan yearly equity, I forget what it's called, but they do a big like 200 breakdown, and they show returns of international stocks versus returns of US stocks, and it's cyclical, obviously, and the US is on about the longest run of outperformance that's ever happened. Well, what's about to change? Show a graph like that, or something that explains how diversification internationally can be beneficial for you. Don't just say, oh, one has 500 stocks and one has 9,000 stocks. Like, it's the most pointless nonsense. But I guess they're trying to get someone to call an advisor. I mean, so it's like,
that is true.
Here's a picture. It gives you no facts. Call the advisor.
The further you get down this post, the more you're like, I got to talk to somebody to even know what the heck they're trying to tell me.
You nailed it. This is like brilliantly done. It just took us a while to figure out what's happening here.
Yeah. Then I didn't mean to dog on this. I do think it's worth a read, so we should put it out there.
Yeah, I'll put it on the Twitter.
All right, we wrapping?
We're wrapping, but I haven't done this in a while. I need to give a few shout outs. Special shout out to our Canadian listeners. Guatemala is still holding strong, Doogles. We are charting in Guatemala, which I love. And then Switzerland's coming out of nowhere. Love that too.
Because of all the banking tax haven talk we got going on, probably. Yeah.
We now have downloads in 4 different countries in Africa. This makes me so proud.
That's nice. I love it.
So shout out. We appreciate you guys listening. We have fun with it. And we really love the listener mail in the community. So you can hit us on Twitter at Skippy Doogles, on Substack at Skippy and Doogles. Is that right?
Yep. Skippy and Doogles.substack.com.
Skippy Doogles at Gmail. We love ratings on iTunes. They help more people hear the show. Have a great one.
Thank you.